Last month's US Nonfarm Payrolls report showed robust job growth and sparked optimism about the health of the US economy. This strong employment data came as a good news amid the uncertainties created by the ongoing Trump-driven trade war. But with the recent US-China trade deal easing tensions, could we see continuous growth in the US economy? The May NFP report might have the answer. The upcoming data will be released on 6th June at 3:30 p.m. GMT3. Stay until the end of this video to get expert predictions on the May NFP and key trading opportunities surrounding the release. Before we dive in, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. Recapping on the April NFP, the number of employment increased by 177,000, which greatly surpassed the market expectations. The unemployment rate stayed unchanged at 4.2% in line with the forecast. While the wage growth is slightly below the market expectation, with the average hourly earnings increasing by 0.2% month-over-month and 3.8% year-over-year. The strong employment data gave the US dollar a boost, which caused the US dollar index to rebound from its previous lows. Gold, on the other hand, reacted negatively to the dollar's strength data and extended its weekly loss. The optimism about US economic growth also lifted the US stock market. The three major stock indexes all ticked higher right after the NFP release. However, crude oil continued its losses, extending the downward trend from the week. To trade around the NFP release, watching the forecast numbers is crucial for anticipating major market moves in Forex, commodities, and stocks. The market expects an addition of 130,000 jobs this month, with the unemployment rate remaining at 4.2%. On the other hand, wage growth is expected to slow down slightly, with the average hourly earnings increasing by 0.3% month-over-month and 3.7% year-over-year. Now, let's break down the potential trading opportunities for three key assets that could see high volatility. Stick around until the end to find out some exciting trading ideas. The US dollar index is currently dipping on the 4-hour chart ahead of the upcoming NFP report. If the non-farm payrolls come in weaker than expected, it could raise speculation about a potential Fed rate cut, which would likely push the US dollar lower. On the other hand, a strong NFP report with a lower unemployment rate could drive the dollar higher, and if wages rise, we could maybe see the inflationary pressure continue. Driven by uncertainty around US tariffs, concerns about a weak dollar, and geopolitical risks, gold is holding strong ahead of NFP, which currently trades above $3,247 level. With expectations of a weaker NFP report, demand for safe haven assets like gold has been rising. A Fed rate cut could push the gold prices even higher. Recently, gold has been fluctuating in the $3,247 to $3,367 range, and the formation of a head and shoulders bottom is supporting a bullish outlook. However, if the NFP comes in strong, gold could pull back to the $3,247 level, with support around $3,200 to $3,247. This could shift sentiment towards bearish traders and lead to further declines. Finally, let's take a quick look at the S&P 500, one of the major US stock indexes. The S&P 500 futures have been falling as investors await the US jobs data and potential tariff announcements from President Trump. If the jobs report beats expectations, we might see investors buying the S&P 500 at a lower price. But if the data is weaker than expected, we could see pullbacks in the stock market as investors continue to withdraw their capital. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.